Hello everybody and welcome to my YouTube channel. I'm your learning partner Sushila Hariharan. In today's video, we're going to take a detailed look on a topic that is emerging in India, which is of great interest to many people, called as private equity. Private equity accounting firms have started outsourcing their jobs and tasks to many accounting entities in India, and that has resulted in the creation of a large amount of administration as well as accounting jobs in the private equity field. So let's try and understand in this video about what is private equity, what is this emerging alternative investment class that is now becoming so popular amongst investors, and why has the reason occurred? What is the reason for a large amount of outsourcing of these kind of jobs and tasks to accounting entities in India? If you're interested in a career in global markets, in equities, foreign exchange, or in interest rate products across operations, regulations, and settlements, in the four dimensions of fund accounting, OTC derivatives, trade life cycle, and custody operations, then do subscribe to my YouTube channel where I post very rich content on these topics. This I am doing because I have 14 years of experience as a global markets trainer in different global investment banks, and I'm more than happy to share this knowledge and information with all of you. Let's take a look at an overview of what is private equity. Private equity is a pooled investment. Like other pooled investments, including mutual funds and hedge funds, the private equity market is a pooled investment comprising of highly institutionalized investors. These investors are called as accredited investors. The accredited investors are those who are allowed to invest in private equity. So every private equity firm decides that they are going to take on investors only who make contributions worth X amount of dollars. This could either be $2 million or $5 million or even $10 million. And they are then accredited by the private equity firm to invest in private equity. Since private equity is for a longish period of time, with time horizons of between 7 to 10 years, accredited investors are needed to have a very high level of risk sophistication and savviness to invest in risky products. The third point is private equity largely invests in unlisted companies. So, unlike hedge funds and mutual funds, which invest in both listed as well as unlisted companies, private equity, by the very name private, means that they will invest only in unlisted companies. Sometimes it happens that there is private equity in public listed companies as well, but that portion of the equity would be private equity. So do remember that private equity investors make investments only in unlisted companies. Okay? Once the stock does an IPO and it goes for listing, then many a times the private equity investors actually exit their investments at the time of IPO. So therefore, it's very important to remember these three aspects. It's a pooled investment. It is generally available for subscription only to accredited investors. The private equity firms are mandated to invest in unlisted companies, and they have a longish time frame of beyond 7 years or even more sometimes. Most private equity firms are structured this way. There are limited partners along with one single general partner who contribute to making and constituting the private equity firm. The general partner is the one who initiates the entire process of starting, building, organizing, and structuring the private equity firm. The general partner, who's also an institutional investor, will then source the capital requirements from different limited partners. And these limited partners contribute to the private equity firm along with the general partner. The general partner is the driving force of the private equity firm. The general partner, as an investor, many a times the lead investor, is responsible for hiring employees in the firm, is responsible for organizing, for mandating the fund requirements, for making investments in different assets, for identifying unlisted companies, for making investments into those companies, amongst other things. The limited partners, on the other hand, restrict themselves only to the structure of being the partner. They're very passive in nature and they're only interested in seeing their investment grow. They do not get influenced into the day-to-day matters of the firm as much as the general partner does. In fact, the general partner, because of the nature of the general partnership, is responsible for almost managing all the wealth and the money of the limited partners and seeing that it is being done in a transparent, fair, and free manner. But how does the general partner solicit interest from the limited partners? There are so many number of the n number of limited partners. How does the general partner know whom to approach? This is done by floating a document called as the private placement memorandum. If the general partner is interested in getting capital contributions from different limited partners, the general partner research analysts, along with their team, sit together and prepare an exhaustive document called as the private placement memorandum. Note the two words, private placement. This means that the capital that is going to be invested by the limited partners and the GP are going to be privately placed. Okay? There is no public notification of the same, there is no public classification of the same, and therefore there are no public disclosures on the same. The private placement memorandum is like a marketing document and it doesn't need SEC approval, unlike the red herring prospectus, which needs the SEC approval at the time of an IPO. The PPM, because it's privately placed document and is not in for public disclosures, is therefore is only handled by the general partner to the limited partners. It contains the scope of private equity investments. It discusses what are the risk factors involved. It discusses about what are the different types of products that they're going to sell into, the kind of companies that they're looking to invest, what is the stage of investing, are they early stage, are they late stage, are they pre-IPO investors, etc. The private placement memorandum is a very important and exhaustive document, and I am going to make a separate video on PPM, especially for those who are involved in the regulatory aspect. Remember, there is no regulation, but there are a lot of internal compliances by the private equity firms itself on the PPM. The PPM is the basis the limited partners will agree to participate in the partnership. They will agree to the capital commitments, they will agree to the capital calls, and therefore the subscriptions thereafter. I have used few terms which might seem a little strange to you or a little new to you. Let's now discuss these terms. Capital commitments and calls. So, how does the general partner get capital commitments from the limited partners? This is a very formal method. Okay, the general partner appoints research and analysts and the sell side traders who go to the limited partners and approach them for capital commitments. If the limited partners like what they read in the PPM and they are convinced about the investing strategy and the investing style of the GP, then they agree to a soft commitment. A soft commitment is not enough to launch the fund. The soft commitment requires some bit of written undertaking by the LP that they will contribute to the funds of the PE. Okay, and that is called as a hard commitment. So once the hard commitment is got, the money starts, the general partner is aware of about how much money is going to come in from each of the limited partners. The general partner then goes on to form the private equity firm and structure the fund. So now the capital has been committed to the fund, and the general partner then identifies investment opportunities. On identification of investment opportunities, the general partners start making capital calls to the limited partners. Once the capital calls are made, depending upon when the investment strategies are decided, the partners then subscribe to their positions in the PE fund. So remember, in a hard commitment, there is a written undertaking for giving the capital. In a capital call, the money actually flows. Because of the structure of the PE firm, it might happen that all the money that comes into the PE firm need not come in a single tranche. It could be in multiple tranches over a period of 3 years. Each of those tranches is called as a capital call. So, money that comes into a PE fund is not in a singular manner. It is not a single shot amount that comes into the PE fund. It comes in by way of different capital calls. All right. And when the partners make the subscription, only then they will be able to get the allocation of the investor amounts. So do remember capital commitments and calls. We will also be discussing about PE life cycle when we talk about drawdowns in a separate video altogether. Let's take an example of what is the meaning of capital call and unfunded commitment. Let's say there's a limited partner, LP1. His capital commitment, hard commitment, is for $200,000. Its capital contribution at the time of launching the fund is $50,000. That means the LP1 has an unfunded commitment of $150,000. This unfunded commitment will be also drawn down whenever the capital calls are received. There could be another LP, LP2, which has a capital commitment of $500,000. So here I have taken two different amounts to bring to your attention that capital commitment across the different LPs need not be the same. They could differ. Of which the LP2 has made a capital contribution at the time of launching the fund of $100,000. That means the unfunded commitment is $400,000. This is classified as an unfunded commitment. Anytime during the life of the private equity firm, there could be capital calls on predetermined dates, and the LP will then subscribe to the unfunded commitment. That becomes then the capital contribution. Thank you very much for listening to the video. If you're interested in more topics such as this, please let me know in the comments section right below. I'm more than happy to share my knowledge with you, and let's keep learning together. Thank you.